Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to show what it's like when the markets are actually being very hard and difficult. It's important for vendors to show videos like this because it's more representative of how markets really unfold. I think there's nothing worse than vendors who just show good, profitable trades the whole time and make trading look easy, because quite frankly, it isn't. As I talk about the cyclical nature of trading in our teaching, we show how markets go in cycles, where there's good times, where there's bad times, and when there's hard times. Good times when you have good, easy trades, good profits. Bad times when you have losing trades, but the trick is keeping the losses small. And then there's hard times when there's a day like yesterday that basically the markets are just very, very frustrating. So I want to show you the other side of the coin, because I think it's important to show both sides when you're looking at any kind of approach or software to the markets. So let's have a look at the ES yesterday. The ES on a day session only chart, gap down. You can see our indicator there says outside gap down, so we'd anticipating the market's going to move to new lows. It moved down a bit, it then would trace back up again and then move down to new lows where a VS buy setup was available. If I place a DP off this level, you can see that it was anticipating major support here, and this is where our new MTP trend color code indicator went grey. So this was actually a trade setup that you were okay to take. So let's place the analysis on here. Right mouse click, do analysis. You were taken into a long trade setup. The market then started to crawl up. There were some sell setups here, but they were against a blue MTP trend, so you would have been avoided. And as you can see, the market went nowhere. If I zoom in a bit, you can see it just crept up here. It was absolutely painful. I know this because I was actually in this trade myself yesterday, so just sat and just watched it grind away, going slowly, slowly higher. Now, normally a VS setup we'd anticipate, because the high volume spike, which you can see we had here, this is normally professionals entering the market, and normally professionals tend to move the market quicker. So that would have been an indication that probably this trade wasn't going to work out. You should be a bit more cautious. Myself, I was waiting till it got to the 100% initial risk level, which is here, before bringing stop to break even. As you can see, it didn't quite do it. The market then turned down and stopped out for a -1R loss. So I just wanted to show this as a very good example to show you that sometimes the markets can just be very painful. They really can. They can just go absolutely nowhere, grind sideways basically, and end up with a losing trade. But of course the trick is keeping that loss small. Even though it's painful psychologically, as you saw this grind out and then turn over and have a loss, because we use correct position sizing, in this case less than 2% of a sample $20,000 account, this would have kept the loss small at one risk unit. But I thought it's important to show the other side of the coin and show how sometimes markets are very hard, and even though at the time this looked like a good trade setup, it just basically went nowhere. And of course this is what traders always have to do. They have to make a decision on the right hand side of the chart when you're live there. At that particular point in time, 11:36, that looked like it to be a good trade setup. Remember, the open gap outside gap down indicated the markets were going to make new lows, is what it did. Came in on a high volume spike. At the time, this looked very good to then have a rally up into at least this decision point level. It just didn't do it. It ground sideways. Let's have a look at some of the other markets. On the NQ, we had a VS buy setup, exactly the same time as the ES. Our MTP trend then turned blue, so of course you'll have avoided the rest of these sell setups, which is good, because for the rest of the day, again, the market just moved sideways. It just dipped down a little bit there, didn't quite make the support, went absolutely nowhere. The YM, let's have a look at what went on here. The YM was slightly different because here the MTP trend was red all day. Because if I place a DP off this low, you can see that it didn't quite reach the major support until right at the end of the day. There you are, right the way there. So the trend was still down. Because the trend was down, you'd have avoided this buy setup. Let's now have a look at the worst case scenario. And let's say you took these sell setups. There was a first one here. Let's right mouse click over the red sell bar. It may have been very doubtful whether you had actually got filled on that bar there, because the market just ticked down and went straight back up again. So it depends how quickly you would have got your order in. You might have been lucky and not filled on this particular trade. But let's take a worst case scenario. It's always good to be pessimistic in these videos. If you had have done, it would have been a -1R loss. The market then came up, made another sell setup, taking you in. It would have double top here, so that even though there's two history triangles, you've only been in one trade set up. But again, that went up to this level here and would have stopped you out. So over that, it would have been -2R loss. In other words, 2 risk units loss. The market then ground sideways till pretty close to the end of the day, where we had a TS4 sell set up, again on a red STF. If we right mouse click to analysis, in this case the market did go to its first target, but just look at this. Here, because of using correct position sizing, it means that the profit on this trade was 2R. In other words, the profit on this one trade here would have made up for the 2 losing trades you had earlier and put you break even for the day. So in other words, position sizing saved you on this day. In other words, it would have been a very frustrating day, but it means you would have been basically break even overall. But for me, the most frustrating one was this particular one here on the ES. Again, it was frustrating because I was in it myself and I just sat there watching it grind away, hoping it was going to get to the 100% initial risk level to then bring the stop to break even, because as I said, VS setups, because they're volume spike, they're normally on the back of professionals coming in to move the market. Professionals normally move the market quickly. Therefore, when a VS setup or the follow through after a VS setup grinds sideways like this, you know that it's probably not going to work out as anticipated. Therefore, you need to bring your stop to break even closer. And as I said, that's exactly what I was looking to do, but it never made it. So that's the main reason why I wanted to do the video today, to show you a couple of things. First of all, to show you how correct position sizing here would have had a break-even day on the YM, because of the first 2 losing trades here would have been made up by a 2R profit at the end of the day, but also to show you that sometimes markets are just plain frustrating. They really are. And there's nothing you can do about this. You just have to know and accept that markets can be frustrating. It's all part of the natural sort of way markets go in cycles, the cyclical nature of trading, as I call it. The good thing about this is, after a period when the markets have been hard and frustrating, like they were yesterday, and they have been quite hard for the last few days, in fact, that then you start to come back to the good period, and as such we should be anticipating some good trades throughout the balance of this week, particularly as we come off the back of last week, which was Fed week, where quite frankly the markets were quite crazy. So even though it's a frustrating day, the good news is we're probably going to come back to some good days in the next few days. But again, I wanted to show you that, to show you the other side of trading, and I think more vendors ought to do this rather than just showing good profitable trades and good easy days. They ought to show you that sometimes markets can be hard and can be frustrating, and of course you will end up with losing trades, but the trick is keeping these losses small and under control. That's what we do with MT Predictor.